Well, good afternoon, everyone. I would like to welcome you all to today's Learn at Lunch webinar. We will hear from Extension Livestock Marketing Specialist, Dr. Daryl Peel, as he discusses current livestock market conditions. If you have any questions, please ask them through the chat window, and you may open the chat window by clicking the chat button at the bottom of the screen. Dr. Peel will answer your questions at the end of the webinar. And we have more information on this and other topics at the eFarm Management page. I'll share this link through the chat window. Dr. Peel, I'll turn it over to you now.
All righty. Well, good afternoon, everyone. I'm actually coming to you today from Springfield, Missouri, where I'm at the Southwest Missouri Spring Forage Conference. And so I'm talking about actually hay costs. And so that'll be just a little bit of what I'm going to cover here. Obviously, we've got a lot of issues, as always, in cattle markets, maybe more so now than some other times. So I'm going to rock and roll through some of this. I'll hit some of it pretty fast and try to save a few minutes at the end if you do have questions, so that we can deal with those. So, whoops. So just very quickly, the broad outline here. We're going to talk about drought. We have to. Drought sets up why, where we are now, how, kind of how we got here, and more importantly, what's going to be coming at us here going forward. Cattle numbers are declining. I'll go through the recently released USDA numbers again on terms of where we are now and what we're looking at going forward. Quickly going to cover demand issues and the broader macroeconomic things relative to beef demand, both domestic and international. So I'll talk just very quickly about the trade stuff and talk just a little bit, as I said, about some of the input prices that we're dealing with as well. Obviously, cost of production is a big part of what's on producers' minds right now, in addition to the market conditions for cattle right now. So just quickly to run down sort of where we are, calf prices in the Southern Plains. Again, you can see the dotted line is 2021, 2022 was higher throughout the year, every week. 2023 so far, the green line here at the top is starting off even higher. That's the general trend across all cattle markets, and that's certainly what we expect to continue to see for the foreseeable future, certainly for 2023, 2024, and I don't know how far beyond at this point. Big feeder cattle, same story. Higher, all of these markets were really at their low in 2020 and started moving up, and we're actually gaining a little bit of momentum here as we go forward. Fed cattle prices, same story. Coming out of the pandemic in 2020, we had a lot of backlogs and all kinds of things to deal with there in terms of capacity constraints. But once we broke through those, really in late 2021, this run up right here in the dotted line at the end of 2021 really represented the market kind of converting to the more fundamental supply and demand conditions, which are increasingly tightening up and supporting these prices at higher levels. Cull cow markets last year was a heck of a ride. It was pretty volatile at times, but generally at higher prices. And that's all the more surprising when we talk about the slaughter numbers here in a little bit. We've obviously liquidated a lot of cows and put a lot of cows through the marketplace, and yet prices have been pretty high. And the green line is a little hard to see over here. It's kind of laying right on top of last year's prices, but we're starting off very strong. And I think we will actually spend much of the year, at higher levels even than last year as we go forward. Okay. Drought monitor. This is the latest drought map. Obviously we've been talking about drought and experiencing drought for well over 2 years now. It really goes back to the last part of 2020. And so, we still have it, particularly now in the central and southern plains, right in Oklahoma. Obviously, we're kind of the epicenter of the drought conditions up into Kansas as well. And we've seen some improvement in this, but not really to change our overall level that much. If you look at, this is for the whole U.S., and if you look at drought conditions in the U.S., this graph shows an index that's calculated from those drought monitor conditions. And without going into too much detail on it, anytime this line is above 150, it means that we're in a pretty significant drought on average across the U.S., or we're experiencing pretty widespread drought conditions. And as you look at the right-hand side of this thing, you can see that we've actually been above 150 for the longest period of time in the history of the drought monitor, going back to 2000 when we started this thing 23 years ago. We had the drought monitor, or this index based on the drought monitor, above 150 for 118 consecutive weeks. Now it has recently dropped below that 150 line due to some generally improving conditions, particularly on the West Coast and things. But we still have a lot of drought in the country, and certainly in some areas where there's a lot of cattle. Obviously, the drought affects a lot of things. Forage conditions last year. We ended the year with horrible pasture conditions, and through the whole summer and through the end of the year. And hay production was at a record low. This data series goes back to the mid 70s, and hay production was the lowest it's ever been in that series. And that leads to then December 1 hay stocks going into the winter were also record low in this particular data series. And so hay is tight around here, around everywhere, I should say. It's generally tight in the country. And of course, if you look at where the hay stocks tightened up the most last year, going into the winter on a year-over-year basis, obviously any of these red, light to darker red to really dark red, it indicates the most, the biggest change or the biggest decrease in those hay stocks coming into the winter. So conditions are tight. Hay prices are at record levels. I'll get to that in just a second. Here's Oklahoma's history, if you will. Hay production, which is the blue line. Actually, that's other hay. I didn't put alfalfa in there, but the total hay supply up here includes alfalfa hay. We don't grow much alfalfa in Oklahoma. About 90%, about 90% of our hay production is other hay. That's what we use primarily for beef cows. And so our December 1 stocks, again, were the lowest in Oklahoma since 2012. So really back to that last drought period that we had. And hay prices, again, because the drought has been more widespread this time, even than it was a decade ago, we've got, record high hay prices all over the country. And, again, there's just really no place to turn to. There's a little hay moving around, but really probably less than you would expect for the drought areas, simply because there's just nobody that has a lot of hay in general at this point in time. In addition to that, not only are hay and forage prices, conditions tight and prices high, but feed grain prices are high as well, have been increasing the last couple of years. And so, and that's not really due to drought. We have high corn prices because we've had a very strong corn market. We have not had a bad, drought or a poor corn crop to speak of. The corn crop last year was a little smaller than the year before. I think I took those charts out, but really, the last time we had corn prices at this level was in 2012, when we did have a seriously reduced supply of corn because of drought. And that's just not the case now. It's just very strong demand for exports and industrial use and other things. So there's really no relief there. And obviously, that affects supplemental feeds for cattle producers out in the country to a limited degree, but really impacts the feedlots in particular. And so we've seen feedlot cost of gain. If you go back to the beginning of 2021, feedlot cost of gain went from the low 80s for these Kansas feedlot data, increasing throughout the year, continued in 2022, and we're up around $1.40 now for steer cost of gain. And so, that's not quite a doubling, but pretty close to it in the last 2 years. Here's Oklahoma's drought map, just to focus on it. And again, we've seen some improvement here, but we still have 80% of the drought in D1 through D4. And so that's a significant amount of drought yet. The southeast part of the state is the only area that has moved out of drought here recently. But there's still quite a bit of drought around the country. In fact, if you plot that drought coverage index, same index as I used earlier for the US, but just for the state of Oklahoma, you can see that now, on a state level, it gets up much higher. It can go to 500. That would be 100% of the state in D4 drought. And obviously we've gotten remarkably close. As recently as October of last year, this index was over 400, which represents a significant amount of drought. We've seen some improvement in that, but again, we're still nearly 300 on that index. That's a very serious level of drought for the state. Okay, turning to the cattle numbers now. Basically, numbers are getting tighter. We've been liquidating from the peak in 2019 for most of these data series. So all cattle and calves, beef cows, all peaked in 2019. They've been declining, but they've declined much faster in 2021 and 2022 because of the drought. And so the beef cow herd was down 3.6% last year. And maybe more important going forward is the beef replacement heifers down nearly 6%, 5.8% year over year decrease. That's going to play into sort of what we can do, even if the drought moderates. And the meteorologists are telling us that there's a growing opportunity for La Nina conditions to fade here in the next few months and begin transitioning, at least in the second half of the year, to somewhat better conditions for us. But even if that happens, the fact that we have such a small supply of replacement heifers is really going to limit how what we can do in the short run and how fast we can turn this thing around, even if we tried to. I'll talk about that more right at the end. So here's Oklahoma's beef cow numbers on one scale relative to the U.S. Just to kind of highlight, here's what we went through in 2011 and 12 and 13. We dipped down, but we bounced right back, kind of picked up a trend here where we were actually growing our share a little bit relative to the country. And here we are again, dropping down fairly significantly. And the liquidation very probably is not quite over yet for the country and perhaps for Oklahoma as well. I wouldn't be at all surprised to see a little bit more herd liquidation under the best of circumstances. If the drought persists, then we'll certainly continue to be liquidating animals going forward. In fact, through the winter here, even without getting into summer growing conditions, we're still tight enough on forage and hay supplies that it would appear that we're still seeing some liquidation. Total cattle on feed. Because of the drought, we kept putting animals into the feedlot. We kept these feedlot inventories at record levels last year through the first half of the year. But by the end of the year, then we finally began to see the inevitable decrease in cattle availability. Feedlot numbers are coming down. January 1 of this year, we were down about 3%. Where our expectations are to be down closer to 3.5% or 4% here for the cattle on feed report that will come out on Friday and on these monthly series. So we're going to continue to see these feedlot inventories tighten up in 2023. It took a long time through 2022 to kind of transition and sort of get the feedlots on the same page as the rest of the industry going forward. Lots of heifers in the feedlot as well. That's been one of the reasons we've maintained feedlots, is because we've been liquidating. So beef production was at an all-time record level in 2022 because of the liquidation and the fact that we were sort of eating inventory. That's a short-run thing that you can do, but you can't do it indefinitely. Beef production will begin to fall in 2023. We've got it down 4 to 5% here. That's probably a minimum level. It could actually decrease even faster depending on how conditions develop here going through the year. I'm going to skip through some of this stuff. Beef, beef demand has continued very strong. Beef consumption is going to fall, but that's because we're going to produce less beef. But the prices are maintaining very strong at the retail level. That was actually chicken, and it's gotten very expensive. That actually probably helped support beef. Beef prices were just steady last year. And actually, when you look at beef compared to chicken, which is this blue line, beef is as cheap relative to chicken at the grocery stores it's been in a decade. Now it's starting to come back up a little bit. And so that may change things a little bit going forward. But the bottom line is that beef demand, domestic beef demand, has been very good. And international beef demand has been very good for U.S. beef. So we set a new record again in 2022 on top of the previous record in 2021 for beef exports. And so that's clearly been part of our support. And again, we're watching global as well as U.S. macroeconomic conditions. There's a lot of concern that we could see weakness, we could see a recession, we could see whatever. But the fact of the matter is, it hasn't had an impact on beef demand at this point in time. Doesn't mean it couldn't happen, so we'll continue to monitor it. But at this point in time, it looks pretty resilient as we go forward. Beef imports are just kind of coming in steady like they always do. We import beef. We'll probably see beef imports go up actually starting in 2023 a little bit, simply because we're going to cut back on particularly cow culling, which is the lean beef that we use to make ground beef. As those supplies dwindle in the U.S. For 2 or 3 years at least, we're likely to see some additional beef imports. Cattle imports from Mexico were the lowest since 2008. So there's some structural change going on in their industry as they develop down there. Cattle from Canada, again, we do trade some live cattle with some changes, but not major impacts on the overall market. Okay, last bit here, a few slides to get kind of where we are. So heifer slaughter in 2021 was down 4% year over year. Last year, it was down another 4.8%. Beef cow slaughter was down 9% in 2021, or up. I'm sorry, I said down. These are up. So slaughter's up. Beef cow slaughter is up 9% in 2021, up another almost 11% in 2022. And so we've slaughtered a lot of the female side of our industry, so much so that in 2022, over 51% of all of the cattle we slaughtered in the country was heifers and cows. And you can see from this graph that has not happened since 1986. So again, we're in a relatively severe deficit of females, if you will, in the short run. That means that as supplies tighten up because we don't have as many cattle, beef production is going to get squeezed even farther at some point, because we are going to try to rebuild. We're in fact smaller than we intended to be because of the drought. Then we're going to really squeeze this thing and make that tight supply even tighter at some point in time. Beef cow slaughter was over 13% last year, which is a new record. It's never gone that high for net cow culling on the beef cow herd. So if you think about what we've gone through since the last drought, which put us at this low in 2014, we put together a fairly impressive herd expansion, cyclical expansion, and recovery, rebuilding from that low to 2019. Then we've liquidated back down. The U.S. beef cow herd on January 1 of this year was a few thousand heads smaller than we were even in 2014. And you have to go back to 1962 to find a beef cow herd that small. So we're smaller again than we need to be, than we want to be, and really than the market wants us to be. So there will be a lot of incentives to rebuild this thing when we can. Obviously, we're still in a drought, so the timing of when we start that rebuilding is uncertain at this point. But clearly, we're going to do it, and the way we're going to do it when we get ready to try to put together another rebuilding / expansion is that we're going to save a lot of heifers. Last time we had record heifer retention following the low in 2014. We had record low beef cow culling. And we'll do something like that again when we can. Probably not so much in 2023. We may start it this year, but I think it's actually after that when we reach the peak in this rebuilding effort. But what it did in 2015, when we did all that heifer retention and reduced cow culling, was we took beef cattle slaughter, I should say, to the lowest level since 1963. And so again, we're going to really squeeze cattle slaughter at some point in order to save females for rebuilding. That's going to really squeeze beef production in the short run. It's obviously going to put a lot of pressure on prices. So prices are already trending up. We're projecting that out here through 2024. But at some point in time, we're probably going to exceed even these trends, and we're going to do something like what we did in the 2014, 2015 period. As we attempt to rebuild this thing, we're going to see a spike in prices. Female prices obviously will get extremely expensive for heifers, and anything breedable basically on the female side is going to get very expensive. And cattle prices will shoot up to some new record level in the process of doing something like that. Beef production will fall sharply. And so even though prices are relatively high now, consumers have a lot of pressures. There will be less beef. Some consumers may get priced out of the market, but beef prices will go up from this point at the wholesale and retail level in general, as we go forward. There may be some fits and starts along the way for brief periods of time, but in general, not only for 2023, but we're talking 2024, 25, and who knows, the timing again of how long this all plays out is uncertain, given that we are still in the drought at this point. Okay, it's a bunch of this is already priced into the market. I need to quit. I'm about done. Feeder cattle futures. If you look at the feeder cattle futures contract from March, which is right now at 186.5, about, by November, that same contract is priced today at 214.5. So that's what is that? $28 priced into the market already. So that takes your calves for the fall. So if you look at October, November calves in Oklahoma, this is our normal basis or average basis. So that puts us up in that 236 to 248 range that you could lock in or price in today, or minimum price in. I don't know that I'd put a topside on it. There's too much upside potential in this thing, but risk management's still a thing that some people need to consider. You could put a minimum price or something close to this with puts or LRP or something like that. Big feeder cattle, if we have any summer grazing or whatever coming off in the fall, maybe September, we're looking right now at pricing those in that 210 to 213 range for the fall at this particular point in time. So, more broadly speaking, these are LMIC forecasts, a lot of numbers here, but basically, we were up double digits in 2022 across the board for calves, feeder cattle, fed cattle, almost 20%, 17% for fed cattle on an annual average. We've got them up another double digits for calves, maybe a little less on top of that for 2023 and again in 2024 at this point in time. Now, these are forecasts. They will get adjusted as we go forward, but the potential for them to drop sharply from these forecasts is quite limited at this point in time. Brent, I'm going to stop there. If there's any questions, I will take them for a few minutes here.
That sounds good, Dr. Peel. I will check and confirm in the chat. So I don't see chat or questions in the chat yet. So everyone's able to ask questions through the chat window by clicking the chat button at the bottom of the screen. I'll also set it where everyone can unmute themselves if you just want to unmute yourself and ask Dr. Peel a question. Either way is fine.
Hey, Dr. Peel, this is Todd Welch.
Yes, sir.
Hey, in my world, everybody's talking about this fake meat that's being brought up. That's what we're calling it. Sounds like maybe Australia's kind of leading the way in it. You got any comments that you want to share with us about that?
Well, at the risk of being maybe excessively flippant, I wouldn't totally ignore it, but it's not really a concern at this point in time. Most of the fake meat, to use that term, stuff, it's actually kind of fading. There's a limited role for it. There's a limited market for it. I think that market is kind of where it's at right now. It may continue to grow very slowly, but it is not at all a threat to the major part of the industry.
Also would like to let everyone know that while you're thinking of questions, I shared a link to a survey in the chat box. And so we appreciate everyone filling that out so we can see how we're doing and how we can improve our monthly webinars. And yeah, feel free to unmute yourself or ask a question through the chat.
Dr. Peel, it's Todd again. I got another question for you.
Sure.
They just said that India's population exceeded China's the other day. Do you see India coming on as being a top 20 exporter? I mean, I know they have a lot of Muslims, but they have a lot of Christians too. I think they got like 300 million Christians over there. What's your take on that?
As far as beef exports, actually, India has been a major exporter for a number of years, and it's still in the top 4. In fact, a few years ago, you got to go back 6 or 7 years or so, for a year or two, they were actually the biggest exporter. Now you got to understand that most of that's coming out of the Muslim part of that culture. And so, and an awful lot of that, it's classed as bovine meat in a global data system. Much of that is actually water buffalo meat. Sometimes it's referred to as cara beef rather than straight up beef, but it's all considered bovine type meat. And so they're big exporters of that product. It's a product that is very different quality. I'm not even going to say poor quality. Quality is in the eye of the beholder, but it fits into a very different market. It tends to go into Muslim markets in Southeast Asia or in the Australasia area. And so, they're not a competitor for the U.S. in any significant way in terms of the type of beef it is or the markets that they work in. And so they're not really a concern from an exporting standpoint. And I don't think they're not going to be a major importer either of U.S. beef, unlike China, which, China is big. Their beef imports have grown fantastically in the last 6 or 7 years to make them far and away the biggest beef importing country. And they're currently our third largest export market and still growing and catching up with Japan and South Korea, which are 1 and 2, almost tied actually for 1 and 2. But China's only a couple of percent behind that as in terms of the imports from the U.S.
Dr. Peel, this is Landon Brooks, and I was out at the Economic Outlook back in October when you spoke, talking about whether you should continue to feed your calves or sell them right now with the prices going up the way they are. What's your outlook on that again? Is it still about the same? Continue to feed them if you think? I mean, I know it's opinion, but.
Well, boy, I always get nervous when somebody starts to remind me what I said anytime in the past. But anyway, that's why I never write anything down, by the way. Somebody's there to remind me. But, I haven't done any particular analysis at this kind of point in time. I mean, that general trend is there. So the trend is on your side. If you're in a position to hold cattle, all else being equal. And again, you need to figure it out this time of the year. I haven't done any specific things. I haven't started looking ahead to summer. For one thing, we're so caught up in the drought right now that, but in general, if you're in a position where from a production standpoint, you can hang on to cattle, then, time is on your side from the standpoint of the prices. Whether or not the input costs is maybe a different issue. So, again, that trend is very much in place. So from that standpoint, yes, I would say, you could think about doing that, but you need to evaluate all that other stuff that goes along with it.
I would like to thank everyone for their questions. Feel free to ask some more if you have them. I'll also remind you that we have our next webinar scheduled for March 21st, also at noon, and Dr. Kim Anderson will provide a grain market update, just as Dr. Peel provided a livestock market update today. We did get another question. Do you think that with packers becoming more and more short bought, will we see a rise in negotiated trade versus alternative marketing agreements, grid sales, etc.?
Oh gosh, I haven't thought through that, but as the market gets short, there's more opportunities. Obviously, producers increasingly have the leverage. So yeah, we might see some of that. The other side of that coin is that if you're a packer and you're trying to fill capacity to the extent that you can, you're going to be interested in formula or contract arrangements to sort of assure at least a base portion of that. So there'll be interest both ways. I don't know how to predict exactly how it'll come out because, at the end of the day, in fact, this is part of what research shows in all this discussion we've had over the last couple of years about price discovery and all of the fed cattle pricing arrangements. It's as often as not, it's the feedlots actually initiating and pursuing the formula arrangements. So it's not just a one-sided thing. So I don't know how to predict sort of what how that proportion might change going forward. Again, to the extent from a packer standpoint, to the extent that they are short of supply, the more they can, make arrangements to have assurance on some portion of it, they're going to be interested in doing that. But I don't know whether they'll be able to get that or not.
Well, if there are no other questions, I'm going to go ahead and end the webinar. So speak now or forever hold your peace.
I have to go give another talk here at this conference in a little while, but I've still got a couple minutes if anybody has another
Excellent.
question.
Excellent. Yes, thank you everyone for joining us today. Thank you for all the questions. Thank you, Dr. Peel, for presenting today.
You're very welcome.
We look forward to seeing everyone on March 21st, our next webinar. So hopefully we'll see you all then. I haven't seen more questions or heard any more questions, so I'm going to go ahead and end the webinar. So thank you,
Alrighty.
everyone, and we'll see you
Thanks.
on the 21st of March.
See you later.
Bye.